Now, give us a sense of how this pandemic has boosted demand for delivery services, and where in Southeast Asia are you seeing the biggest growth?
Well, to be honest, I think it would be a bit inaccurate to say that it's boosting demand all across. We are seeing a small increase in overall demand, but the growth is quite uneven. So there are some sectors which we are seeing a drop in demand, for example, fashion. In other sectors, for example, we look at, say, personal wellness or gym equipment. So in those sectors, we're seeing quite a big spike in demand in dry goods, in FMCG goods. All that we are seeing quite strong growth, but there are sectors which are quite badly hit.
You've just raised $279 million. How exactly are you planning to use this fund?
So we think that the COVID scenario would be very helpful because to a certain extent, it is quite interesting how the entire dynamics has changed. E-commerce used to be a small single-digit percentage of retailers, and it was always important, but it was hard to really focus on it. But with this change, what we expect to see is a renewed focus on e-commerce, where a more omni-channel strategy becomes very important to combine both retail and online together. So with this renewed focus, we think this will be an inflection point for e-commerce in Southeast Asia. And with a huge growth expected, a lot of capital expenditure is required for us to continue building up our hubs, our connectivity lanes, the network on the ground. In addition to that, what we also see is quite interesting is the whole resurgence of a direct-to-consumer trend, where brands, retailers, influencers, they all want to own their consumers. And we believe we can help them do that by connecting the entire supply chain for them. So more than just delivering parcels for them domestically, we are moving into a space which helps with the micro supply chains of the millions of entrepreneurs in Southeast Asia. And this will be a very interesting endeavor, and we are slated to deploy a fair bit of our capital there.
To that end, of course, technology is key. Are you looking to perhaps acquire or develop your own?
Well, we have always believed in developing technology. I don't think we are allergic to any form of acquisitions, but most times what we have seen is that the technology you acquire, unless you need it immediately, it always requires very significant refactors, and it's very expensive to build up a lot of technical debt. So if possible, we would like to focus on what's important to us, and with that focus, we build for the long term. I think this gives us a much longer runway, a much longer strategy, instead of picking up companies or technologies which are the flavor of the month. So we like to build a lot of it ourselves.
Chang Wen, it's Yvonne in Hong Kong. Thanks so much for joining us. Given just the size of this funding round that you got, what can you tell us about the company's valuation at this point? Have you reached that unicorn status?
Well, I'm afraid when it comes to valuation, it's something which it's not just an external thing, but even on an internal basis in town halls, we don't discuss valuations. We like to discuss core business metrics, where we are, where we're going to go. A number is just a number. I think it means very little, and it focuses people on the wrong things. It's a vanity metric. I guess the number you're asking for, is it $1 billion over and above? Truth be told, I think that's a number which we fight very hard to get people not overly focused on. So I don't tell people internally, I don't tell people externally, we should not be focused on the numbers. All we know is that we grow 2 to 4 times year on year. We are increasingly profitable in different markets. And I think that's what you take heart from, because the valuation is nothing but a number.
All right, valuation is just a number. Tell us a little bit more about the business, though. I mean, you said you're profitable in half of the markets that you cover right now. You still need time to be solidly profitable. What's the blueprint for that now, and what does that mean when it comes to the cash flow front?
Well, I think on the cash flow front, we are quite blessed with a good slew of institutional investors which are very well funded, so we are not overly concerned on cash flow. Obviously, we are always prudent on cash flow. So I think on the cash flow side, we do what makes sense. We don't chase a new shiny ball in the room, neither do we overly spend too much money. We grow we essentially spend the money in the best way possible. So in terms of where we see this entire business going, it is really a lot of hard work. I wish I could tell you it's a lot of sexy technology and so on, but the reality is a ton of hard work. We have two pillars. We focus on building the best technology available. We focus on providing the best operations and focusing a lot on the people in the business. And from people, I mean everyone from a vice president in HQ all the way down to a driver. The whole way we run the company is to focus a lot on a very robust organizational structure, very clear, very focused, and we deploy technology to help us where we can. I wish I could give you a magic bullet which would allow us to become solidly profitable, but I think the best magic bullet is just prudence and focus.
Chang Wen, when you have operations in Southeast Asia, Indonesia is key. It's a huge market, and the internet economy has grown something like 50% on average a year. What's your plan for Indonesia?
Well, I think our plan in Indonesia is we believe in the growth, but similarly, we believe in the growth in the rest of Southeast Asian countries. We don't think Indonesia's growth trajectory is wholly different. What's different is the sheer size of their population. Indonesia makes up almost half of Southeast Asia, and rightly so, our volumes, our business is also split almost in that way. So we believe a lot in the growth of all countries, but given Indonesia's size, it requires half our effort, and rightly so, we have placed half of our resources in Indonesia.
Any plans to go beyond Southeast Asia?
So stepping back to prudence and focus, we would love to go all over the world. It's a great story, it's a great vanity metric, but we focus. Southeast Asia is where we play, Southeast Asia is where we understand, and Southeast Asia is where we stay.
All right, staying in Southeast Asia for now. It is getting to be a quite crowded market, though, when it comes to logistics, Chang Wen. You have SingPost in Singapore, JNE in Indonesia. You have Lala Move, GoGo Van as well in this part of the world. As we get a little bit more efficient in the market, how do you maintain those margins? How do you keep them high? And perhaps what's the hardest part here? How do you keep that boost in revenue growth?
Well, to be honest, keeping margins high, it's not so much a function of competition, but a function of our clients. So we have a few big clients, e-commerce platforms. These guys keep us honest. They push pricing to the bare minimum. They force us to be extremely efficient for us to continue operating. So it's less a function of competition. But if you look at competition, this is a business of scale. It's not a business of relationships. It's not a business of a magic bullet from a technological advancement. It is a lot of hard work coupled with deploying technology in the right places. So this means that it's not a winner-take-all market. So many people make the mistake of thinking that an economy or a sector or an industry is a winner-take-all market. And they spend tons of money trying to subsidize and dominate a market, only to see that perhaps it's an oligopolistic market. It's a market which should have a few players operating it, not one, but not many. And I think understanding the end state of this industry is very important. Our view is strongly that this becomes an industry with a few big players. So there's no point trying to kill off everyone. Everyone should be consolidating to the right level, playing together with a few competitors you have, not to undercut each other, but to provide the best service you can at a profitable level. So that's what we firmly believe in, and that's the kind of strategy we've taken. Competitors, as you mentioned, SingPost, the others, these guys keep us honest, they keep us nimble, they keep us innovative, and we hope that we all grow together as an industry.
Final question, any plans to go public? Is that actually something that you're looking at now? Is this the company's priority?
I think the company's priority, as you mentioned, was to be solidly profitable, right? So I think until that point comes, exit optionality is always considered. There are multiple forms of exits, whether it's a public exit, a trade sale, a secondary sale. I think there are many ways to exit. The reality of it all is that if the company's fundamentals are strong, we see tomorrow, and we have the option of what happens tomorrow. So yes, I think all options are on the table, but I think right now, solidly profitable is probably the byline of what we focus on.